Hello. So the company under analysis is Denta Water and Infra Solutions. Now, as the name suggests, this is an infrastructure company, Infra Solutions. But water is also there. So this is an infrastructure company with a specific focus on water management projects. Water management projects like groundwater recharging, saving water projects. This is a small cap company. It is not big. As you can see, the market cap is 902 crores. Current price of one share is 338 rupees. Book value, that is assets minus liabilities per share. So book value per share is 153 rupees. The PE ratio, the price to earnings ratio is currently around 15.5. Return on equity, 18.4%. Pretty nice. Return on capital employed, 25.2%. Return equity, return capital employed both seem to be pretty high, very high, basically, good numbers. Moving on, looking into the P&L of this company. Now, this company, I believe, did exist before 2020, but I believe had their IPO. They had their IPO recently, so it's not the oldest of companies. So in March 2021, okay, 2021, we had sales of 29 crores. In 2022, we had sales of 120 crores. In 2023, we have sales of 174 crores. In 2024, we have sales of 239 crores. But in 2025, sales declined by 14% to 203 crores, 14.8% decline. Now, the reason they have given is that there is nothing, the reason they have given, the company has given a reason for this decline in revenue. And they said, okay, this is not because of any problem with the company. Nothing problematic happened. It's not like they're not getting more construction projects. They are getting work, they are doing the work, but in construction, the revenues that companies get is according to a percentage. Usually, percentage of the project is completed, then they get the revenue. For example, they complete 20% of the project, they may get 20% of the total contract value of the project. If they complete 50% of project, they will get half of the revenue, just as an example. So they said that this decline is only due to a billing issue. Billing issue, that is the money that they need, okay, the money that they were going to get from projects that they have done is going to come in the next year. And that's the only thing. Also, it seems that majority of the revenue comes in like the March quarter, which is the January, February, March, that quarter. I believe that's quarter four. So in quarter four of every year, every financial year, the majority of the revenue comes, and this revenue decline basically is due to not some fundamental issue with the company. They are going to make more money. They were supposed to make more money, but the billings, the revenue they were supposed to get will be coming in the next year. So that's why the decline happened. So here we see the revenues are rising a lot, and below we come to operating profit. Operating profit and important thing, operating profit margin. Now, this company has very high operating profit margins, 46%, 43%, decline 38%, 33%, 34%, 33%. So operating margins currently seem to be consistent around 33%. Here we come to net profits for this year, which is 2025. Operating profit 68 crores. 34% is the operating profit margins. Tax of 26%. Finally, we come to a PAT of 53 crores, which is a decline from last year only because of some billing issue, the timing of the billing. And the PAT margins, that is the profit after tax margins, are around 26%. So 33% is the EBITDA margins, 23%, 26%, 26% are the PAT margins. So very profitable company overall. And here we come to cash flows from operations. bit fluctuating. So the cash that they're generating from their operations, okay, let's see. 26 crores in 2021. Okay, minus 8 crores in 2022. 52 crores in 2023, 27 crores in 2024, minus 72 crores in 2025. So it seems they're not generating. They do generate cash. Sometimes they do generate cash, but it's very fluctuating and it can go a lot down and then up. It's very fluctuating, very volatile cash flow from operations, which is a thing that is important. Cash flow operations is a very important metric. Moving on, we can see the numbers, the sales growth and all the growths in percentages, accurate percentages. So sales growth over the last 5 years compounded has been 215%. No, yes, 186% has been the sales growth compounded. Uh, Over the last 3 years, it has been 19%, and last 12 months, decline of 15%. Compounded profit growth has been 215% over the last 5 years, 11% over the last 3 years, a decline of 13%. Again, because some billing issue, the timing of the billing. Then, again, the company recently had its IPO. That's why the stock price growth has not been written even for the last 3 years. Return equity on a decline from 39% 5 years ago, now 18%. This, okay, the company is posting higher revenues, is posting higher profits, but return on equity had declined because their assets, the assets of the company have increased a lot. Okay. The majority of these assets increase is only inventory, so raw materials and all that. So we saw that, and then we can see return on capital employed. Okay. So ROCE, return on capital employed, in 2021, 122%, in 2022, 147%, 85%, 2023, 60%, and declined to 25%. Now, majority of no, return on capital employed has been declining because assets of this company have increased a lot. But majority of these asset increase is either trade receivables, which is the money that customers are yet to pay this company, or inventory, that is raw material and all that. This company does not have a lot of fixed assets. They pride themselves in being an asset-light company. So we looked at the P&L. It's a recent company. Revenues have been rising. Profits have been kind of rising. In 2025, sales around 203 crores, a profit of 53 crores, cash flow very fluctuating, return equity, return capital employed, declining, but still in the high numbers, not very low, pretty good numbers. So we looked at all of that. Now, we come across more information about the company, what it actually does, all that. Okay. 9 years since incorporation. So this company has been around for only 9 years, and they have completed 38 projects related to water management infrastructure development. The main focus again is water management projects. All right. 26% profit after tax margin, 37% EBITDA margins as of June 30, 2025. The latest figures, that is Q1 fiscal 2026, these are the margins. Again, very high margin company. 20 projects are ongoing as of June 30, 2025, and their order book, the total amount of the projects that they have, is around 5,936.79 million rupees, or 593 crores. 593 crores is the total book value right now. Sorry, the order book, the total order book. That is the total value of all the projects that they have. So moving on, more information about their expertise and what differentiates this company. So they say in the section of who they are a leading civil engineering contractor. So civil engineering, specializing in water revitalization and groundwater recharge projects. They have a proven track record in delivering technically advanced, sustainable solutions to a skilled and experienced workforce. The core expertise, very important, this is their niche, water infrastructure management, where they provide end to end solutions for design, installation, commissioning, and maintenance of water management systems. Then the second expertise is groundwater recharging, which is innovative recharge solutions using recycled water for long term sustainability. So, one important thing to see is here in key differentiators, it has mentioned that they do everything from designing the projects, installing the projects, commissioning the projects, and operations and maintenance. Operations and maintenance is important because it provides sustainable long term revenues from existing projects. Projects have been completed, projects have been given to the client, and when there is operations and maintenance required, then the water will get recurring revenue. Okay. They also have presence in other sectors like railways, highways, infrastructure. And they're one of the few companies in India with proven expertise in large scale groundwater recharging projects using recycled water, like sewage water, cleaned, of course, cleaned. Now, uh, yes, moving on, we have the track record. So, the track record from fiscal year 2021 to fiscal year 2025, they have handled 699.5 crores worth of projects in water management, 11 crores or 110.78 million rupees irrigation projects they've handled, very small 9.733 crores in road work that has been handled. All right. And in railways work, they have handled 39.94 million rupees projects, operations and maintenance 4.8, and other projects where they've mostly shown this sign of water is 429.76 million. That is around 42 crores worth. Okay. Moving on, this is their current order book and how it's actually divided. So the total order book, right? The total order book is around 593.6 crores. This is the total value of the projects that they're currently doing. This can be considered as their future revenue for the next, let's say, 2 years. You can say that. Okay. So, majority, 93% of this revenue is coming from one thing only, water management projects. 93%. Then the next biggest segment is railways, accounting for 3% of the total order book. Then 2% and 2% is divided between irrigation projects and roads. Okay. Now, water management is the company's main focus and they consider this their niche. Again, they said, then the water said that they're one of the biggest companies, sorry, one of the few companies, biggest and few companies who have the ability to execute groundwater projects, groundwater recharging projects on a large scale using recycled water. I think that was all the information in this. As a summary, again, 93% of the order book came from water management. Water management is the main thing which has been the focus. And this company is a very profitable company, highly profitable. Now we come to their annual report where there's even more important information. So first we come across this. Okay. 70 to 75% historical win ratio for tenders. What is a tender? I just searched on Google. Okay. If there's a construction project, right? So contractors, construction companies will bid on the project. They will send a tender, which is like an official proposal sent by contractor to the person's projects, to a project, for a project. So whatever tenders they have actually sent out, whatever proposals this company has sent out, or bids, we can say, whatever bids this company has sent out for projects, They have won 70 to 75% of the total tenders or bids that they have sent out. Big thing, 70 to 75% of total bids that they have made, from what I understand, they have won. Okay. Now, aggressive pursuit of new work. This is the future. The management team has set an ambitious target to significantly expand their project pipeline. So, new projects. By bidding for new work valued at around 12,000 to 15 million rupees within the first and second quarters, fiscal year 2025 to 2026. 12,000 to 15,000 million. From what I understand, this is around 1,200 crores to 1,500 crores of projects that they're actually bidding for. So if they actually bid for all this, historically speaking, they say 70 to 75% they can win. Historically, of course, past performance is not an absolute measure for future performance, but they're targeting 1,200 to 1,500 crores of projects within the first and second quarters. I believe this year only, first and second quarters, they're bidding. And remember, the revenues are only around 230 crores. So if they actually win, let's say 70% of 12,000 crores, how much is that? 70% of 12,000 crores, it's around 840 crores. That would be big for the company, big for the revenue. All right. Okay. Again, same point mentioned. The company has maintained a strong ratio, win ratio of 70 to 75%. 75%. And they intend to leverage this competitive advantage of actually bids, winning so many bids to secure more large scale contracts, particularly within the water sector. All right, all right, all right. Moving on, we have the profitability. Now, this company, again, is extremely profitable. We saw that 37% margins. Why? Why are they so profitable? So, they have given some reasons. First, let's read the proven track record. Now, they have a proven track record, this company, on executing projects. They have executed 32 groundwater recharge initiatives and they've executed 35 projects in total. All right, all right. Their competitive edge is reinforced by the robust in house designing and engineering team. They are equipped with expertise, keyword, expertise in areas such as feasibility studies, hydraulic modeling, and structural engineering. Basic thing to keep in mind is very experienced workforce, okay, very experienced workforce working in very niche areas which require that specific expertise which maybe other companies may not have. Now, their core specialization in these complex, high impact water management projects directly contribute to our ability to maintain healthy profit margins. They're confident that their strategic focus on niche yet essential projects, combined with a disciplined execution and efficient asset light business model, enable us to deliver superior financial performance. So, expertise on niche areas and focus on niche areas combined with their asset light model. Important point, this company has an asset light model and they're almost debt free. They have almost no debt, this company, long term debt basically. Moving on, more discussion about this asset light model that we just talked about. It's an important thing here. Okay, asset light advantage. Reading from the where the black line starts. The company operates on a discerning asset light model, a strategy which has proven instrumental in enhancing project execution and significantly reducing the need for substantial capital expenditure. This fundamental approach of asset light model enables them to minimize their costs, minimize upfront costs, outsource equipment requirements with associated costs included in tender bids, and critically improve the return ratios, driving efficient capital utilization. So, this asset light model enables them to minimize their upfront costs, outsource equipment requirements with associated costs, including tender bids. They focus on development management, they focus on joint development agreements and joint ventures. They can leverage expertise without being fixed by a heavy fixed assets, leading to leaner and more agile operations. Now, because they don't have a lot of heavy assets, they can be faster basically to execute projects better and, of course, be more profitable. And this company has achieved a remarkable zero debt to equity ratio. So, debt as a percentage of their equity is zero for the first half of fiscal year 2025. So, as a summary, focus on niche areas, water management projects, uh, asset light model. They don't have a lot of assets. Majority of their assets are again trade receivables and like inventory raw materials. They have their own in-house designing team and skilled workforce. Okay, moving on, we have the vast market potential. Correct? The vast market potential. Okay, here now this is you can consider as the industry growth to an extent. Okay, here there's a figure given 23,849 million US dollars, 23.8 billion US dollars is the projected size of the Indian water and wastewater treatment market by 2023. By 2023, this is their market. Essentially, this is Denta Water's market. Now, here it says we operate within the rapidly growing Indian water and wastewater treatment market. So, which market are they in? The Indian water and wastewater treatment market, which is poised for significant expansion. Projections for the growth of this market is seen as or estimated as 6.2% from 2023 to 2033. All right. In 2023, what is the valuation of this market? $13.1 billion, expected to reach $23 billion. All right. Now, here they have mentioned South India. South India, in particular, is expected to capture a significant share of this market with a projected CAGR of 6.24%, so slightly higher. Now, why have they mentioned South India? Because around 80% of the revenue comes from South India. 80% revenue comes from Karnataka. Karnataka is 83% of their total revenue, basically. But they are looking to expand into more states. And why is it 6.24? The regional emphasis is linked to expanding population. So, more population, there's rapid urbanization going on in India and more industrialization of India, which will create, of course, create more demand for advanced water management. Of course, more people, more industrialization, more urbanization. So there's more need for what we say, clean water. And as water is becoming scarce, then the water feels that they can play a pivoting role, an important role in providing such projects. Now, I think that was all that we should see. That was all that we could actually see. Um, there's one more thing I can show, which is this. Okay. 83.98% of the revenue was derived from the government of Karnataka as of March 31st, 2025, showing their strong regional foundation. So very, very concentrated in Karnataka. Okay. But they are trying to expand out of these states. From what I understand, they're trying to expand into other regions like Maharashtra and all. I think I can find this. Uh, or I think I can't find this. Again, they recently had the IPO in January 2025. Recently had the IPO in January 2025. Interesting. And I hope I can find that page. I think I can't find that page. Okay, here we go. We have something. Now, again, Karnataka, primary base of its operations. 80 to 85% of its projects are in Karnataka. But now, states targeted for strategic expansion and national water initiatives: Maharashtra, Madhya Pradesh, Gujarat, Uttar Pradesh, and Haryana. These are the states it's targeting. And of course, a lot of its revenue will come from government, right? Government projects. So stuff like government's Atal Bhujal Yojana, stuff like the Jal Jeevan, uh, what was it called? The Jal Jeevan Initiative, basically. Jal Jeevan Mission. The Jal Jeevan Mission, the Atal Jal Scheme, all these schemes for groundwater recharging, water management, cleaning water, and all that. These will be the main revenue drivers for Denta Water. And one last thing, I do own some shares of Danta Water, so I have a conflict of interest here, I think. So keep that in mind. This is not financial advice. This is just to show some information about this company to you. I hope you found some of this information like important or useful, basically. Here is the balance sheet, or some of the things of the balance sheet. Only thing I want to show here was this. Look at borrowings. Again, all these figures are in crores. Look at borrowings. One. 1 crore in 2020. 0, 0. 1 crores, 1 crores, and 1 crore. The total borrowing is 1 crore as of March 2025. Other liabilities are like trade payables and some other stuff like that, like reserves set aside for employee compensation, all that. Now, the reserves, the money that's been left behind for some specific reason, are 382 crores as of March 2025. They have almost little to no debt. They don't have a lot of fixed assets. This is number 24. That is their fixed assets. 24 crores of fixed assets. These are other assets, okay? And majority of these other assets, you see 403, that's the other assets, and 24 crores is their fixed assets. This 403 figure, again, majority of its inventory, trade receivables, and cash equivalents of the company. So that's it. Hope you have a nice day.